engineers and insurance. Now, there's a multiplicity of topics we could talk about here, including, all sorts of quite fascinating, what I call hard engineering topics around sort of the real use of detailed engineering support for underwriting firms and things when it comes to sort of underwriting renewables and things like that. But I felt, given the breadth of the audience here, that maybe we could take a topic of particular sort of interest to me, and that is the role of insurance as a social good, and the role of engineers helping to make that better. And if we think about this as we will over the coming minutes as I talk and then in discussion, insurance sort of sits at the lifeblood of society and of the economy in many ways, because what insurance does is it picks people up, it picks companies up when things go wrong. And as such, not only does it help them in those difficult situations, but it gives them the confidence to grow. It gives them the confidence to innovate. It gives them the confidence to be bold and to be brave. And so, therefore, for all the disparaging comments we often make around insurance, I think it's not hard to realise that it's an absolutely critical part of our society, but it is one that has an awful lot of opportunity to do things even better if it sought maybe more advice from the broader world. And so that's what we'll touch on today. Now, I just wanted to mention, some of you will see that image on the right-hand side. And what I'm always keen to do as sort of part of my aim in life to make sure we're all embracing technology as much as we might, is this is an image created by generative AI. Now, some of you will already be using the likes of ChatGPT and things to do your to help you in your work and your everyday life. As some of you realize, that technology can also create imagery, and you'll see 4 or 5 such images that I've created that way as we go through. And I think I add it in as a side point to the main discussion, because I do feel that AI in so many ways, including insurance and including at the intersection of insurance and engineering, is something that's very critical. And I do like to show that what in the past would have been nigh on impossible, I would have to go out and pay someone a lot of money to create bespoke images for me, is now created in just a few seconds using the technology. So if we turn to this page here, this is a slide from something called the Disruptive Futures Institute, which, in and of itself isn't important. But what's interesting is that they're showing on the left-hand side this sort of illusion of an ordered world, and on the right-hand side, the sort of complex reality of what we actually live. And there's a phrase you'll see in the title of VUCA world, which I know some of you are aware of, others may not have come across, that's saying that, we're increasingly living in a sort of volatile, uncertain, changing, ambiguous world. And that is a challenge. Insurance as an industry is used to surprises. By definition, when an insurance claim needs to be paid out, it's because something has gone wrong, and things that go wrong tend to be a surprise, whether it's a fire or a war or a pandemic, or as we'll get to in a moment, a ship driving into a bridge. But there's a difference between surprises sort of in structured silos and the complexity of our interconnected world, where a surprise in one area may impact other areas. And if we look here, insurance as an industry is more like on the left-hand side. Insurance is structured around industries that it supports. It's structured around particular types of products, so underwriting property or underwriting liability or underwriting cyber risk. And the world is on the right, and insurers are not necessarily therefore really ready for that. And I would hypothesize maybe that engineers think a bit more like the right-hand side. And certainly, as I remember my time many years ago working at Arup, and sitting there as a sort of a junior apprentice engineer and watching the architects talk to structural engineers, arguing with the M&E engineers about where they were going to put tubes and pipes and things, that interconnectivity of discussion is inherent into the way one approaches any type of engineering task, whether it's a physical build or something in sort of the digital and virtual world. But it's not how insurers have traditionally thought. So, even before we start on anything else, there is a way of thinking around an interconnected world where I believe engineers can teach insurers quite a lot. Now, what have we got here? Insurers, this on the left-hand side, that's my little image, again, created by generative AI, that says insurers are actually quite good at paying money. So notwithstanding any specific frustrations about business continuity during COVID, or maybe some personal challenges if you've had claiming on your travel insurance or something, but on the whole, insurance is pretty good at paying out money at the right time for policies that is underwritten. What it is less good at is actually understanding the evolving problems and preparing insurance products that will satisfy that. And that's what we'll get into. Because if we look at this as a very simplistic chart, on the right hand side you have paying a claim. As I just said, insurers are good at doing that. And then as you move left, you have the need and desire to mitigate risk, because frankly no one wants to pay a claim if they don't have to. And then on the left hand side you have avoiding risk. And if I can be very, very simplistic about life, I think insurers sit on the right because that's their job. An underwriter gets up in the morning, he or she is thinking, I want to underwrite some policies today where at the end of the year, what I have paid out in claims is hopefully less than what I have received in premium. And frankly, the insurance business is really that simple. Now, if you're an automotive underwriter or writing certain types of property insurance, say against fire or flood, you take a 1-year view. If you're writing certain other insurances where maybe things go wrong on a less frequent basis, for example, insurance against hurricanes, then you may take a 5 or 10-year view and say, right, I want to make a really decent profit for 8 years out of 10, because on the 9th and 10th year, I'm going to have to pay a huge amount. But essentially, the insurers are very good at doing that. I would argue that as engineers, we sit on that left-hand side. As we start any kind of project, we are wrapping into our design, into our problem solving, an aspiration to maybe, if not avoid risk, at least to minimize risk and then to mitigate the risk. So, again, we're thinking in very different ways. Another point to make is the difference between what I've called here B2B versus B2C. So B2B is, that commercial insurance if you're an organization that's buying insurance, versus on the right if you're an individual buying insurance. Because when it comes to designing the right insurance products to reducing risk, on that commercial insurance B2B side, we're actually pretty good at it, as we'll get into. Whilst on the right-hand side, that B2C side, just the nature of the very modest premiums that are being paid by individuals to their insurance companies means that it's pretty hard to wrap in the level of sort of bespoke design or risk reduction that could make a real difference. It's, if you're only paying a couple £100 for a policy, you're not going to get any type of bespoke support or advice. So let's just touch on the sort of the green smiley face for a minute and why it's like that. Because this is the value chain at a super simple level. What happens in insurance is on the left-hand side, you have a client. It could be Rolls-Royce, it could be British Airways, it could be Vodafone. They need some insurance. They go to a broker. The broker works with the insurer. And then for completeness, on the right-hand side, we have what's called a reinsurer, someone like a Munich Re or a Swiss Re that gets involved if things go very, very wrong. Now, in that sort of relationship where policies are tens or hundreds of thousands of dollars and claims are, up into the millions or tens of millions, it is absolutely cost effective to have a broker. And some of those brokers are what I would call hard engineers, true engineers. And in fact, I don't know if he's here with us tonight, but Phil Hewer, who is one of our freemen, is a fantastic example of that. So, his job title, as you can hopefully see on the image there, is risk engineer at Lockton's. So he works at Lockton's, which is a broker, so that second block, and he has decades of experience, which he brings to bear when the client and the insurer are talking about how to underwrite the risk. And so there are dozens of people with his skill set, and there may well be other livery members, freemen, who are also in that role, and they can make a difference. Also, if we look at the not just the broker but the insurer side, here is a company called FM Global. Most of you won't have heard of them. It came up as a name for some of you who attended the sustainability event at the back end of May. What FM Global do, they're an insurance company, just like many other insurance companies you've heard of, but they have a view, an engineering-led view. And I can share these slides later. I have later if people want to read the specific writing. It's it's sort of purposely small, not to distract. The key bit of writing is in the bottom left. FM Global say insurance losses are preventable, not inevitable. And their logic is that with the right risk management, there is an awful lot you can do to reduce risks. And that picture of the fire in the bottom right is their research center. They actually have a research facility. Whilst you think of most insurers having nice sort of shiny glass blocks in New York or Zurich or Bermuda or here in London, FM Global, as well as having the nice shiny offices, they have a research laboratory where they test things properly. They set things on fire. They have a tornado simulator that fires bits of wood and rock at walls and at glass windows at 200 miles an hour to understand what happens and see what they could do about it. So you've got in that B2B sort of commercial insurance value chain, people like Phil, companies like FM Global, and that means there's an awful lot of risk management already going on. Now, it doesn't always work, because here's an image that many of you will recognize from a couple of months ago. Even when you have all sorts of great risk management on the ship, great risk management around on the bridge, things do occasionally go wrong. So as I say, most of you remember this. This is Baltimore, the ship Dali, that the details frankly are still being worked out, but it appeared to have a loss of power, potentially due to contaminated fuel. As a result, it lost its steering and it went into the bridge. Notwithstanding the tens or hundreds of risk management steps taken in both cases. Now, what's interesting, and by the way, one of the good bits of news here is that insurance will do all the right things in terms of paying out to cover all this. So it's an example of insurance doing exactly what it ought to do. But if we look at this next slide and look on the right-hand side, and hopefully it's legible. But as you see here, that top left picture is of the bridge supports. There's no obvious fender system, and it compares them to these other three images: rock wall, island barrier, fender. Now, you don't need to be a structural or civil engineer, frankly, to look at that and think, if you've got a 95,000 ton ship, I'm not even sure whether those other fender systems would have made a difference. But the interesting point is, notwithstanding all of the efforts made around risk management on the ship and on the bridge, it still allowed a major incident like this to occur. So B2B insurance by definition is not doing a perfect job of getting rid of risks, but it's doing a pretty good job of mitigating and minimizing and ameliorating them. Now, if we look at the B2C side, we see a similar value chain, except that broker is missing. Now, some of you may still go to a broker to get your home insurance, your car insurance done, but you'll know that pretty much all they are is a human equivalent of going online and filling in a bunch of questions. You're not really feeling on the whole, unless you've got a particularly complex situation or a particularly nice art collection, that you're getting any meaningful support from your broker. And so what you have, therefore, is a gap, sort of literal and metaphorical, where the relationship between the client and insurer tends to be a simplistic, transactional one, a sort of race to the bottom on cost in most cases. And what that does is it creates a shortfall of expectations. It creates what we sometimes call a protection gap. And so I guess my question to us is, where can engineers make a difference in this? Where are there ways that we think, things that we know that can help improve, even though by definition you have a transactional relationship? If you're only paying a few £100 or a few $100, how can we improve things? And so a few things we'll talk through. One is enhancing buildings. Another is this term parametric that I'll explain briefly. Then there's about understanding risk more, and then just an example around solving point problems. And what I want to do by rapidly running through these examples is just sort of get your sort of intellectual and mental juices flowing a bit, so then we can have an interesting sort of Q&A and maybe take away some of these thoughts back into your sort of day-to-day roles in your everyday lives. So let's go with enhancing buildings first. So this here is not a generative AI image. This is a real photo taken from Hawaii after those tremendous wildfires they had. And again, it doesn't take an experienced structural engineer to notice that something very interesting is going on here. And without diving too far into the detail, essentially, this house by definition didn't catch fire, and because what it had by accident, this was not a design by the homeowner or by a clever architect, this was by accident, but very effectively creates a feedback loop into building regulations and things, is they'd replace their roof with a tin roof, for reasons, as I say, that had nothing to do with fire, and they'd torn away all of the dry scrub around the house because they had a personal preference to have more space. And as a result, the problems with these type of wildfires is not actually the flames roaring across from one property to another. It's the sparks that are thrown up into the air that will then land on some sort of combustible material, and it's those sparks that are thrown by the wind that move across and basically set everything on fire. And this particular building, the sparks that landed on the roof had no combustible materials. The sparks that landed round the edges had no combustible material. And so obviously this is a very fortunate homeowner. What does that lead to? That leads, as I mentioned before, to a very proactive effort to learn from that and to move that into building regulations and things. And there's a great example of that if you look at this image here, which is the photo following Hurricane Ian, which hit Florida last year, I think, or the year before last year. And there's some roofs standing there. Now, you may be used to images of tornadoes where you have that phenomenal effect where a tornado will take out some houses and not touch the ones next to it. This wasn't a tornado, this was a hurricane. But what was the difference in these roofs? The difference in these roofs was they'd been built to a more modern building code. And the more modern building code for roofs in hurricane areas includes the exact angle, what it's made with, how it's attached down and things. And again, these are lessons that get learned the hard way, so to speak. But Florida is leading in this in terms of learning from these rapidly adjusting building regulations and things. And so there's there's an awful lot that we would ideally want to do proactively, but you can't go around and change millions of properties' roofs, but you can absolutely learn from when things go wrong and understand how to build back better. And certainly that build back better phrase is one that is very keen with the insurers as they're trying to understand how they, from a social good point of view, they can help the insured after they have to make a claim. And then this image, which some of you know, and it was something that I've spoken to Brian about in the past, and it was he who introduced me to this company. This, as you can hopefully see, is a mobile home, but it's a mobile home on hydraulics. So these aren't just stilts, and there's obviously a whole logic behind building properties on stilts, but it's actually on hydraulics that can lift it up and lower it back down. And again, what's interesting about that technology is if you start doing it on small buildings like this, then you can work out how you use that more broadly. And any of you who are involved on the structural building side, you'll know that a lot of the lessons from making sort of essentially earthquake-proof buildings have progressed hugely over the last few decades, and we see some incredible buildings withstanding earthquakes now. And I think we now in a world where flood risk across so much of the planet, including areas that you would never have dreamed it if you were tracking what happened in the UAE a few weeks ago, where the flood risk is in many ways the biggest single risk that will be hitting us across the globe, and therefore engineering solutions to identify how we can manage flood is incredibly important. In a moment, we'll get to parametric insurance, which also plays to that. One little thing to touch on before we leave the joy of hurricanes. Here you can see two hurricanes heading towards Florida, just above Cuba. These hurricanes have similar strength in terms of wind, and therefore if you're designing buildings or infrastructure to withstand wind, these two hurricanes bring a similar challenge. The difference, though, of course, is the one on the right is far larger. Now, what does that mean? Obviously, at one level it means a bigger area is impacted, but actually it's that the challenge is a storm surge. So as some of you may know, clearly the wind damage of hurricanes is huge, but actually one of the most costly impacts, both in terms of financial cost but also social cost, is the storm surge. And what happens is the hurricanes will build up this sort of bank of water that will go far inland, and it goes slowly, so it's not an equivalent to a tsunami. You don't have that sort of tsunami type damage, but it goes inland and it floods, and it's water there's such a volume that it typically doesn't then drain away for days. And when you have a flood as big as the one on the right, then that obviously has a hundreds of miles long storm surge, pushing far more water and causing flood damage even well away from where you have wind damage. So again, where people in designing in Florida have been focusing on the wind side for the previous decades, actually, if we're going to see larger hurricanes, we're also going to see more storm surge and therefore a flood challenge. So I wanted to touch on parametric briefly. Parametric is sort of maybe the most insurance-y part of this, and I realise that most of you have no desire to sort of become pseudo insurance experts. But I felt it was worth a mention for 2 points of view. One is because actually there's a sort of an interesting data and analytics and engineering angle, but also because I think many of you will find the concept of parametric insurance being one that you bump into over the years ahead. Whether you're sitting as part of an organization that's having to buy insurance in floodplains, or whether you as an individual have a property that you're going to see certainly in the flood area and increasingly in other areas the role of parametric and what parametric insurance does. And don't worry about reading the text on the left. I just want to refer to the graph on the right that says there's an estimated $70 billion of annual global flood damage, but only about $10 billion of that's insured. And there's a variety of reasons for that, but in part, and this will resonate with some of you, if you have your warehouse in a floodplain, somewhere in Derbyshire, or if you have a house somewhere in the West Country that has been is on a floodplain or has been flooded recently, you can find it incredibly difficult to buy flood insurance. Because if you're AXA or Aviva or Zurich, who are doing vast quantities of household insurance or small business insurance in the UK, you will pay out once, you'll pay out twice, you'll pay out the third time, and then you're going to say, look, I've had enough. We're either going to charge an enormous premium, or we're just not going to offer you. So you see all sorts of people not being able to buy flood product. Now, the logic of parametric insurance is that what it does is it allows you to define your flood cover differently. And instead of if you accept that you can't buy the normal flood insurance you want, you can buy a flood insurance that kicks in at only if the flood is 10 centimeters or 20 centimeters or 50 centimeters. Now, why does this make a difference? And there's an example of a chicken farmer who has his chickens, and he has the machine for packing the eggs and things, and it's on a floodplain and it's been flooded, but now he's raised it all on stilts. So it's 50 centimeters above the ground. Now, when he goes to Zurich or Allianz or Aviva and asks for insurance, in their mind, on their flood map, he's still a bad risk, because the only risk that they can underwrite is what they've been used to doing, which is, well, when you flood, we have to pay out, and they're just not interested. But if he goes to a parametric flood company, he says, I want to buy some parametric insurance that kicks in only if the flood is above 49 centimeters, because he knows that up until then he might have to switch his machines off for a day or two, but the machines aren't going to be damaged. He therefore essentially doesn't want to pay a huge premium for coverage that's not going to make a huge amount of difference. If the flood goes to 55 centimeters and damages his equipment or drowns his chickens, then he's going to want to make a claim. And so that concept of parametric, i.e. the insurance pays out if a certain parameter is hit, rather than by nature of the damage, is one that we're going to see increasingly. And there's just a little article here. This is from the Telegraph in February 2020, when the storm Kiara flooding hit a whole load of people, and some of you will remember this. Flood Flash, that logo on the right, which is the what's called the InsurTech startup who underwrote this, they didn't need to send people out to look at the damage. They had simply set a parametric trigger, and when the water gave above a certain level, they sent a check. And so that massively reduces claims costs and massively improves the experience for people who may otherwise not buy insurance. And you can see this little sort of diagrammatic image here. This is traditional insurance. You have risk, you have costs, and you have a whole load of uncertainty. That leads to a blue premium bubble, which is just what the insurers need to charge in order to cover that cost and that uncertainty. Parametric insurance, the risk remains the same, but the uncertainty reduces, because they're saying, right, we're only going to pay out if it's, say, above 50 centimeters. And by the way, the cost also reduces as well, because someone hasn't got to go along and look at the actual nature of the damage. They're simply paying out a pre-agreed amount very efficiently. So that is a topic I'd love to have a conversation in a couple of years' time. I think if only 2% of you now have heard of parametric insurance, it'll be a much higher number in a couple of years. And it is an incredibly data-driven thing, which is why it's relevant to our world, because actually here we talked about flood. This is parametric quake insurance, as in earthquake. And how does that all get worked out? That worked out with these incredibly detailed earthquake maps and things, which again brings in the role of structural engineers, geological engineers, etc. Let me just rattle through the next few points, because I'm aware I've spoken slightly longer than planned. But understanding risk. This here is an image of a house in the US. There is a company that has photographed, analysed, and broken down to a late level of detail every single roof in the US. Why is that useful? That's useful because you can then understand the risk of hail, again, to our earlier point on the risk of wind, and it allows a better understanding of what needs to be done in terms of, for example, mitigating against hailstones if hailstones are going to start getting larger. This is one of the concerns around climate change. We'll skip over this. Another thing we can do as insurers using modern technology is we can essentially use AI and imagery. So here we have just a typical photo of a street. Here you have a swimming pool. Now you can combine the information from the policyholder that says I don't have a swimming pool with this image that says they do, and they've either been incorrect on their policy application, or maybe they built the swimming pool since the beginning of their policy year. Now, as an insurer, you want to charge differently if someone has a swimming pool and if they don't. It's a different type of risk. In the old days, it relied on paper, etc., etc. Now we're using technology, the technology of getting ultra cheap imagery from satellites and planes, and the technology of AI-driven image analysis to be able to spot these. And what you're doing is you're not trying to catch the homeowner out. You're trying to help the homeowner out by saying, look, we've noticed you've got a swimming pool. You realize we may not pay your claim. If you have a claim, you need to change your policy. And so in theory, it's a win-win. Final just thought when it comes to to the use of technology, clever digital engineering, etc. There's a company called Cover, CUVVA, Glasgow-based, one of sort of the startup insurance success stories of the last few years. What they do is they offer car insurance by the hour. And you might ask, why is this relevant? Well, their use case is, let's assume Martin, Dolores, Peter, and I go out for a few beers, and Dolores is the nominated driver. So she's going to just stick to a half of shandy, but then actually thinks that this is an evening to celebrate and breaks out the rosé, and suddenly realizes that she's not the right person to drive home. In the meantime, Martin hasn't had too much to drink. Now you have three scenarios. Either Dolores can drive when she oughtn't to be, Martin can drive her car uninsured, or you go on to Cover and you pay 15 quid and you have an hour of car insurance. Now, we're probably not the demographic they're looking at, but this has been incredibly effective in terms of both managing that type of scenario, but also the scenario where someone goes to maybe visit an aging parent and aren't insured in their car, but then their parent says, look, can you drive me around for a couple of hours in my car? We'll go to the pub around the corner that I need to drive. And so this would have been totally impossible a few years ago, because what you needed was access to the DVLA database in a rapid way. You needed to be able to take a photo of the person's driving license and prove that it was a real photo, not a fabricated photo. You needed to use GPS geo-positioning to know where the car was, because what you want to avoid is someone buying this insurance after they've had an incident, etc., etc. So what we're seeing, back to our earlier point about our sort of increasingly connected and convoluted world, we're seeing smart, engineers, sort of digital technicians, etc., bring together these ideas to fill gaps that allow insurance to do a better job for individuals and for society. So, my challenge to all of us, really, it'd be great to have a conversation around this, is, if we go back to saying insurance are good at paying a claim, but really they don't do enough about mitigating and avoiding risks, how can we bring an engineering lens to the topic and make a difference in terms of reducing the number of claims and making sure the products that exist are those that people need in order to get the insurance they want.